All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, spiders here, SPY getting a little bounce this week. Last week we talked about this level here. So if we look on the weekly time frame, we talked about this little 390 area. We got down there, we pierced it, got down to 388.42. And we said, this is still a good amount of support here. We had a nice little sell-off 3 weeks in a row. And, we went straight into this level. So usually when you go straight into a level without any sort of consolidation, you're going to usually hold that first back test. And that's what happened. So we got a nice little bounce here on the weekly time frame for the markets, and, a little bit of a bid there. So a nice little recovery, kind of reflex bounce. A lot of volatility in this market. So we had a huge kind of uncontested run up from July to August. And then we pretty much just erased that in, about 3 weeks. And so now we're getting a bounce back up. So, nothing goes down or up in a straight line forever. And you need to have these little moves here. Now that we're above that 400 handle, also 4,000 on the SPX. Here on a weekly close, I think we're going to give the market the upside bias to about 410 on the spiders, and about 411, maybe even 413 there if you want to back test this upsloping trend line. This actually was a head and shoulder pattern that played out perfectly to target. But in any case, up in this area, you got the 20 moving average. This is your little pivot there from where we broke down. So right in that 410, 412 area, that's kind of what we're looking at here. That I think is in play for next week for your biggest test on the upside. A couple of things coming on this week. So we have CPI Tuesday. Consensus is 8.1%. So we'll see what we get there. Overall, the number is the number. We're looking for the market's reaction to it. That's really what's important here. But that is the consensus. We also have end of quarter, and we have quad witching OPEX next week. So there will be a lot of game playing, lots of volatility. Personally, I am a little bit more neutral going into this week. I think it's going to be more of a chop fest. I think we have a lot of sideways action. Obviously, I could be wrong, but usually we don't see any sort of major type of movement in any one direction during an OPEX week, let alone a quad witching OPEX. So generally, I'm still, nothing's really changed as far as my bigger picture. I'm still looking for some type of a lower high and lower prices in the market. But rarely do you get some type of a big dump out in OPEX week. So, generally kind of just looking more neutral towards the market this week. But we do have some, potential catalysts, especially with that CPI number. So if there is going to be a big move, that could be it. Then after that, next week, we have the FOMC as well. But anyways, here, so we talked about the spiders there. So triple Qs, for those of you who follow the NASDAQ. Same levels here, so about 312.75. So it's going to be that same pivot that we have on the spiders from the 24th. So 312.75, right around the 313 handle if you want to round it up there. And then you got the 20 moving average. So there's your pivot there. And then that down sloping trend line. So a pretty good resistance level here that we're coming into on the Qs as well. But those are the levels that I've got worked out for the upside for this week upcoming. Russell 2000 via the IWM. Pretty easy to see there. You got that 190 level. That's been a good pivot point for the Russell 2000 for quite some time. It also basically coincides with that same August 24th pivot date that we just showed on the spiders and the Qs. And then again, that 20 moving average down sloping. So those are your levels there. As far as the diamond Dow Jones, this is a little bit on the softer side. Did not get above that pivot there, whereas every other index really did. And I would say that this level here is much more out of reach this week. So I would say upside is really more like 325, 326 here on the diamond. And then you've got that down sloping 20 moving average. Shifting gears here to semis. So semiconductors, again, same levels here. We had a nice little up move, finally closed above that little pivot from September 2nd. You're coming right into this level here at 218.32. Remember, this was my level on the downside a few weeks ago, and we pretty much blew right through that. So we'll see if this holds on the upside. If it does get through that, again, same levels here, the August 24th pivot right there. And then you've got all these moving averages kind of converging in that same area. So those are the levels there on the semis. As far as IGV, the levels I have here are 295 and 300, so just above that red bar high. There's also a gap fill there if it were to overshoot a little bit, but IGV actually getting a pretty good bounce this week. Dow Transports here. So I talked about this all week long. It was very notable that the transports were on the weaker side pretty much all week. So if we look at the price of crude, that took a pretty big hit on Wednesday, and the transports actually took a good dump here in the morning. So there's that first hour of Wednesday, and we had a good dump there. So they were kind of dumping with the price of spot crude, which is not a good sign of strength. So the transport, if crude is falling, the transport should be bidding. So they are a little bit on the weaker side. You did manage to close above that little pivot there, but transports are on the weaker side. Again, if it gets through, if the market does inch up this week, the transports will inch up as well. But you do have a little bit of a headwind there around that 100 MA. If you can get through that, I'd say your kind of upside, short-term upside would be that 20 moving average here in the near term. All right, shifting over to interest rates, the 10-year. Basically a sideways week. As you can see, we had that nice gap up at the beginning of the month, and we just kind of went sideways here all week, although it did make some pretty good gains. Short term, you are into some resistance. I do think the 10-year probably does some backing and filling next week, as does the 30-year. But the bigger picture here, it was a mostly sideways to up week for rates, but the bigger picture here, the thing that we all need to be watching is the yield curves. So 2s and 10s still well inverted by 25 bips. It did drift lower a little bit this week. The one that I'm really watching here is the 3-month and 10-year, and the reason for that is we kind of put in this bearish flag here, and then we came up into that 50 moving average on Tuesday. So we had a nice bid, and then Wednesday that got rejected. So if you want to take a look at the weekly, that is a pretty good bear flag there on the weekly. So if this starts to go negative and 2s and 10s stay negative, again, it doesn't happen right away, but this will do damage down the line. 5s and 30s also dipped negative last week, and they're still hovering right there, so right by that flat line. So again, got to watch those yield curves. If they start to break down again, it's going to spell big trouble for the market moving forward. All right, so we talked about rates here. Let's look at HYG as well. HYG trying to put in a little higher low. It's stalled out at that 50 moving average. This is into pretty good resistance right now, so I don't know how much more upside this has this week, but it did get a nice bounce off the lows, so we'll give it the benefit of the doubt, at least for right now. Over to financials, XLF had a nice day on Friday and Thursday for that matter. So you were kind of in this little lower range here between about 34 and 32.50, so a little chop there. Nice little breakout there back above the 20 moving average. I think this wants to get up to about 35, so that would be that red bar high right there and right in that range. So I think that's where that wants to go in the near term, but I don't think it gets much through that afterward. And then broker dealers here, same kind of level, so right around that 460 area, 461, that would be your kind of upside target here in the near term for XBD. All right, shifting over here, let's get into crude. So crude, continued to back off a little bit earlier in the week, and then got to bounce off that yellow trend line we've been talking about. So again, I think we are in full disclosure, I did start a position in oil here via UCO, which is a oil ETF. But again, we talked about that yellow trend line here. Nice upsloping trend line. The only thing I don't like about it so much, and I still like the level, but I just don't like that we had a bear flag right above it. Usually, I want to see it go straight into the level, but either way, crude got a nice little bid off the lows. Did not get above that breakdown candle. If you get a daily close above that breakdown candle at 87.76, I would think that it's very likely that crude has put in a very, very, possibly a very long-term bottom. Until that happens, I'd still say there's a chance that we could dip down into the mid-70s. I would not rule that out. So that's why I'm just kind of inching into a position here, and then you can see that's the level there essentially that I'm looking at, is that upsloping trend line there as well. But this is still a really good level. I've been talking about it for months and months now, and we're finally into it. So I felt comfortable opening a position. I do like this area for accumulation on crude. I'm sure you guys are well aware of the fundamentals. I know Jason talks about them all the time on here, but that is the level I've had worked out for a while, and decided to pull the trigger on that. Anyways, XLE here, not much to talk about. It kind of just chopped sideways this week. Still remains really relatively strong compared to the rest of the market. XOP, it did kind of break out of this little channel here, so a little bit of a bear break there, but again, still holding up really well. It's one of the only green sectors really year to date in the market, and then there's the OIH there as well, kind of some chop fest as well. Although it did get a nice little bid on Friday there and broke out of that little tight range there. So energy continuing to hold up here, and bottom line, I still I think accumulation is the right way to play this at the current time. Nat gas. Big dump earlier this week into that upsloping trend line. I did not initiate a position in this. I don't like the velocity of the move here. If this happened over the course of 2 days, if it took 2 days to get down to this area, which you kind of had a secondary day there, but I mean, it got to the level in 1 day. I don't like that. It's just too much speed here, and we kind of got a little bit of a dead cat bounce right now. So nat gas, I'll say this, it's been very resilient all year long, so I wouldn't rule out just a random bid where it just powers back up. But currently, if this flags here and starts to bear flag, this can get down to $7 really quickly, maybe even 650. Those are tradable levels for sure if we get down there in a quick line. But for right now, again, that's trying to hold that trend line that we've been talking about for quite some time. But again, really the last 3 days of the week, just kind of a dead cat bounce so far. So we'll have to see. I'm kind of neutral on it right now, although long term, obviously, the trend is still well up. All right, uranium, let's take a look at CCJ. Just continues to be a powerhouse here. I still think it's a little long in the tooth near term. It's going to have a ton of resistance if it gets up to that 3150 area. It basically got up there on Friday. 3129 was the high, but I mean, geez, what a powerhouse move here. Let's look at the weekly. Again, you see that weekly resistance as well. 1, 2, 3 candles up. So I think we probably get a pullback here as well. And especially going into OPEX week, this is really overbought. So a lot of retail is probably buying calls up here, and there's incentive I would say for the institutions to want to burn those out. But overall, I mean, it's just been holding up really well. You got to give it that respect right now. URNM. Same kind of thing. It's, coming into these red bars here. So again, a lot of resistance, a little bit overbought here short term, but you do have that inverse head and shoulder pattern. I think this can get up to 88. It doesn't mean it's going to go up there in a straight line. Doesn't mean it's going to go up there tomorrow, but that's kind of your target there for that currently. And then for those of you who follow Sprott, same kind of thing here. So a lot of resistance up here in this $13.50 to $14 area, but, still holding up really well there. Quick look at Mosaic and IPI. Just, nothing really going on here. Again, we revisited that little trend line. We talked about that last week and really just kind of chopped around this week. So nothing too major going on the weekly time frame. Again, red candle. Then we got a little bit of bounce there. So this still has a little bit of work to do, but it's hanging in there for the meantime. Intrepid, same kind of thing. So they're holding up okay. I don't really see any problems right now. At least not yet. And then DBC here. So for ags, interesting little thing. So we kind of broke down on Wednesday and then had a little inside candle, and then Friday gapped back up and closed above this trend line. So a little bit of a sign of strength, maybe a fake breakdown. I see this happen all the time. They run the stops. They get everybody to stop out on that trend line break, the 200 moving average break. By the way, let's take a look here. Yeah, you got to go all the way back to November 2020 to get the last time you closed below that 200 moving average. So we got a little test of that, little fake breakdown potentially. So this can often be a catalyst. I'm not saying I'm predicting that, but a lot of the time breakouts happen after fake breakdowns, and because they bag the shorts who jump on here, they bag everybody's stop loss, and then they take it up higher. So interesting little tidbit there for DBC. We'll have to be watching that next week. All right, here. So let's get on to the dollar. Dollar index finally pulling back a little bit. Still held that 20 moving average by the close on Friday, but it did have a nice little dump, and that was part of the reason why the market was bidding up so nicely. I've said this before, and the dollar index, I said once the dollar tops, the market will probably like that in the short term. The problem is the market's going to realize pretty quickly after that the dollar topping is a tailwind for crude. It's a tailwind for corn. It's a tailwind for soybeans. It's a tailwind for silver. It's a tailwind for copper. You guys get the idea. So that's kind of a little kind of thesis I'm watching here is if the dollar starts to play out, or the dollar starts to top out, does the market get a short-term bid, a short-term relief bid, and then do commodities start to put in floors? And if those commodities put in floors, the market will start to freak out. So just a little dynamic there to keep an eye on. In the near term, I'm not sure if the dollar has topped. I mean, it's tough to say at this point. I don't really have a major sell signal on this, especially the fact that it bounced off that 20 moving average on Friday. If I get a sell signal, I'll be the first to let you know. But overall, it's still holding up. It did back off the highs, so we'll just kind of leave it at that. I do want to say, though, really quickly, the U.S. dollar yen, which we talked about a few weeks ago, that has hit my upside target. So you guys remember, it was probably like a month or two ago, I talked about this inside bar pattern here on the dollar index yearly, and that's played out to target. So that is satisfied the measured move target. I wouldn't rule out it going a little bit higher. You got that 50-month moving or 50-year moving average, I should say, that has just started to print now. It's only started to print in 2020, but it's satisfied the targets. And then you have this pivot high here at 147.65. So there's nothing to say it can't go a little bit higher. You do have this daily upsloping trend line that it backed off of. So we'll see, maybe it comes back down and then goes up into that 147 area. It's possible, but I am on watch for a top in the US dollar versus the Japanese yen. So just wanted to throw that little update in there for you guys. Anyways, so we talked about the dollar. On to gold. Gold a little bit on the softer side. It's no way to deny it here. So there's still potential for a higher low, but you would have liked to seen a better bounce here off the lows. It's more kind of a dead cat bounce, sort of. It's almost like a bear wedge here. But the thing I'll say, this is the important thing. Take a look at GDX. GDX has it's much more of a V shape off the lows, right? It's a straight line pattern, whereas gold itself is, a lot. The angle is less steep. And same thing with the royalty and streaming companies, GOAU here. Just looking at the ETF. Again, a V shape. If we float, I don't do this that often, but if we flip on a Mac, you can see we've got a really good bullish divergence here on the GOAU, GDX. See that bullish divergence there, higher lows, lower lows, and GDXJ, same kind of thing. You want to see the miners bottom first. So basically that's the point I'm making here. Gold can underperform in the near term, but if miners start to bottom first, that indicates that there is money flow in the sector. Let's take a look at silver as well. I did pick up some silver this week as well, and I am looking to buy some physical here in the very near term as well. That's how much I like the levels that we're coming into. But we did get back above that 1850 area on a weekly closing basis, so we reclaimed that area. And if we look on the monthly, really good level there. It took you basically a year to break out of that level, and we came straight down into that, now back above that. So nice little move there for silver. But as far as the miners are concerned, so take a look again. Low, lower low. SILJ juniors are making higher lows. So we're seeing risk on go into junior miners with lower lows in the price of silver. So keep an eye on that moving forward here, guys, as that is usually what happens before the metals bottom. So definitely keep that on your radar here. And then platinum, I still own, averaged in at the double bottom here. And looks like we could have that WV pattern potentially play out like I talked about. So we had a nice V shape off the lows. And then what we're looking for here, we went right up into these moving averages. It should pull back here. What we're looking for is a pullback or a flag, something of that nature, and then you get your V. So you get a W and then V up. So that's what we're looking for here on platinum. I love platinum right here. I think it's holding up really, really well. All right, here. So let's flip over to copper. So again, copper trying to put in a higher low. It did close below that that 20-day moving average on Friday, but it got a nice bid there. You had good volume come in on this higher low in that 340 handle. So a nice little move there. If we look at the COPEX, the copper miners, this actually gapped above the 20 moving average and closed above it. So again, the miners here starting to lead the metal just a little bit. So we'll definitely got to keep an eye on that with COPEX. This may have upside, up into this red bar here, before it comes into resistance. You can actually see, just flip this on. So right in there, there's that pivot, 100-day moving average, pivot again. So it'll have resistance up there, but again, it's leading spot copper for now. So again, just another thing to keep an eye on here moving forward, but it does look like copper has or is trying to put in a higher low here. All right, then lastly, Bitcoin here. So Bitcoin finally, I have something positive to say about it. So we finally had, first of all, this looks like short covering to me, but finally, at least it got off the canvas, right? So, just we've mentioned this before, down, bear flag, down, bear flag, down, bear flag, down, another bear flag, another bear flag, and then finally, it looked like he was trying to put in another one, and then we finally got out. And so one of those things I've been saying too is that, like, I can't find anything good about the chart. The technical pattern is absolute. It's pretty much trash. The positive is that it's so bad that sometimes it's almost a positive, because there's so many shorts in it. Everybody who wants to sell is already sold, and you kind of get those relief rallies, those short covering rallies. I'd give it the upside bias here to about 24,000. After that, I'm not so sure. It's going to have a big test up there. But hey, it had a nice bid this week. It was overdue. It needed to get out of that range, and you basically wiped out 2 weeks of trading here in one day there on Friday. So nice little pop there for Bitcoin. We'll give it a golf clap. A nice move. Ether is coming into the merge, so that is still outperforming. If this can get above 1847, so that's this red bar right there, it can get back up to 2,000. So we'll be on watch for that. But Bitcoin finally getting a little bit of a bid here, so we'll give it a little golf clap for now. Anyways, spiders here. So basically long, big picture. Next week, kind of neutral here. I give the market the upside bias into these into this area here, 410, 412, somewhere in that area on the spiders. But overall, I do expect some chop this week. We'll see how the market reacts to CPI, and then the week after that, we've got a very important FOMC meeting. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll talk to you all next week.